Welcome back, Alpha Hunters. Hope you guys are doing well this week. The markets are closed for February the 17th of 2023. And we saw some market pull back a little bit more over the week. The market tried to go bullish early in the week, so we'll talk about some of that. But you see on the chart here, several dates out here in the future that are basically key points in time, right? We're going to have FOMC and CPI for the next few months out here. So I just went ahead and put that on the chart. That way we know exactly when they're going to be. We can kind of plan around them if you want to have exposure to the market during these times. Now, the arrows don't indicate anything other than just like the date and time. So they don't indicate like a directional move or anything like that. So nothing like that. But just wanted to let you know that this is out here. I probably will move these if the price action kind of gets in the way of where they are on the chart here. But just want to let you know that these are out there, and it's probably not a bad idea to have something like this on your charts. That way you can be very clear about what you expect in your analysis as well. But let's just continue right along looking at this week's analysis and what kind of went on this week. The market started off a little bullish on Monday, ran right up, got a little sideways in the second half, middle part of the day. And that was pretty much how the market ended. It was mostly just bullish right away to start out the week. Tuesday morning, we got a little bit hotter than expected PPI. So we saw a little bit of a gap down. The market traded higher, came back down, pushed back higher into the day, basically just slightly down, but a little bit higher than the halfway point. Obviously a little bit higher than the open. Not a bad trading day, but it's just really choppy. And then Wednesday we had a little bit of a gap down, traded sideways, and it just kind of slowly trended higher throughout the day. Basically ended right on top of the very high of the day. And then Thursday morning came in, gap down, nice little gap down here on the market. It was a pretty strong gap down, and that's the thing that we had seen a lot really here over the past 2 weeks is any gap down has been bought up. It's been a very strong theme throughout the past 2 weeks, and we saw it get bought up. It looked very strong, and then the last hour came in on the day, and it just couldn't hold, and it just kind of cratered all the way down, ended on the session lows pretty much then on Thursday. Friday gap down, just continuation from that Thursday selling, and basically just traded sideways, a little choppy here throughout the first half of the day, and in the past couple hours trying to end it on a strong note for the week, trading higher just a bit, but still down day over day. So here's the sector performance for the S&P 500 week over week, and you see the SPX or the S&P 500 here was basically down roughly 0.5%. And the XLY here was the outperforming sector on the week, and it performed very well. The XLU came in second. The fourth one was XLP Tech, down kind of at the lower end with real estate and energy. Energy got smoked on Friday. I know if some of y'all own some of them energy stocks, they got obliterated. So not really sure what that was. I didn't really look too much into the news. I just saw that they were all red, and they were all red a lot. But that's how these sectors worked out for the week. Taking a look here at the VIX. So the VIX, it was a pretty volatile week for the VIX. And, it kind of looks like it's trying to form an inverted head and shoulders. I don't think it's going to play out. I just don't think the inverted head and shoulders on the VIX here playing out is really something that's going to happen. I think those will probably come back down as we most likely go bullish here over the next few weeks, and we'll get into a little bit more of that game plan here. I do think we'll probably see some settle out next week, or especially early next week. Probably see a good opportunity to be bullish on the market, and I think the VIX will probably just trade down here over the next few weeks. So I know it looks like inverted head and shoulders. And if the VIX does get over like the 2250, 22 area, maybe we start to see some real bearishness come in, but it really needs to break that neckline around 22 or so. And until we see that, there's no real reason to be really all that bearish on the marketplace. Looking here at the dollar's been pretty strong, had a nice little consolidation really over the previous week or so. But this week we saw a little bit more of that continuation from that pop that we saw in early February. And then Friday's candle came in with a nice upper wick, looked like a resting type candle after really Thursday's breakout, Friday's kind of continuation, and it came back down. And this is really when the stock market started rallying. It was when the dollar and rates kind of started taking a drop here a little bit. It doesn't mean that they're going to reverse and just start dropping here. I would expect more of a resting and consolidation here over the next few weeks, then possibly continue bullish as we get into March. But I do think we'll see some more just resting here on the DXY and the dollar. Speaking of those rates, the 10-year rates snagged that late December high today, and it's sneaky, right? It just came right back down. So same thing here for the 10 years. That's kind of mentioned for the dollar. I expected a little bit more of a pullback here. The 10 year has been a little bit more of a bull trend over the past 2 weeks, not really so much consolidation. So I'd expect a little bit more of a, maybe a deeper sideways pullback, and then it probably continue higher if it's going to continue higher. But yeah, I'd expect some consolidation here on the interest rates before they make, that continuation push higher. So looking here at that 10 and 2-year inversion yield, I know a lot of those yield curves are inverted, so pretty much any one you look at is going to be pretty much inverted. It's crazy how many of them are inverted right now. But I was kind of mentioned this for the, better part of the past month or so. We probably just come down and snag this low that we put in December and then immediately get back above it. And we did that this past week on Tuesday, got right below it. Wednesday, we came right back above it. Thursday continued to come back above it and got back to basically the weekly highs where we started on Monday, on Friday. So probably see maybe this continue to go towards the bullish direction. And if this thing starts to really gain steam, it's going to be really tough for the stock market, as typically is the significant signal that we are in troubled times economic wise, and the market is looking for some help, some help kind of supporting the financial system. So we'll see if this kind of plays out kind of going forward. But yeah, keep your eyes on this. Taking a look here at gold. I've been looking forward to possibly getting in on gold, or maybe even silver on a pullback. Speaking of silver, they are in a pretty good spot. I'll take a look at that here in just a second. But GLD here, taking a nice pullback here. Obviously taking a little bit of a resting day today. Nice little pull up. The dollar showing some weakness later in the day. So yeah, I still think we're going to see this pullback. This will probably be the pullback that you want to try to get in on for like multi-year run. And yeah, we'll see how far down it kind of goes. We'll see how things kind of shape up as well. Taking a look at the SLV silver ETF, very nice, getting right into this box. We were looking at this earlier this week on the live stream. Yeah, and I dig it. I do want to see a couple more days of consolidation in here before I probably pull the trigger and then get back above maybe the high point, which right now, might be Friday's high. But I want to see a little bit more consolidation. We'll see what happens really with the dollar. If the dollar continues to press higher, it's going to continue to push silver down, which I'm okay with that. I'm not like hugely bearish on silver. I would rather get it on a pullback. I do like this zone, so I kind of want to see how silver performs, especially if the dollar does move in the bullish manner. Does the silver or SLV here just kind of move sideways and base out? I would like to see that. I want to see some of those relationships, how that kind of plans out, but I do like where it's getting into currently. All right, so taking a look here at the HYG, the high yield corporate bonds. So the past couple of weeks, we've seen this rotation where the bond side, even the LQD we'll look at here in just a second, they've been extremely bearish, like just moving hugely bearish direction. And we have not seen the stock market kind of match that directional move in the bearish direction. So it's just been interesting to see this kind of play out. So what I would like to see here over the next few weeks, and we'll kind of get into that plan here on the SPY, but as this thing looks like it has pulled back quite a bit, I want to see what kind of retest we get. Do we get up into the lower parts of this channel that it had late in January? So around the 75 to maybe 76 area. And if it does that, what does the stock market do? If the stock market's making new trending highs, maybe getting up into the 420s, yeah, that's going to be pretty good divergence here, right? If the HYG and the LQD not making new highs, stock market is, and then they start to roll over, stock market might play catch up very quickly. But definitely keep my eye here on the HYG and also the LQD to see what they kind of both do. The LQD has been getting hit pretty good, which is really interesting with, this is supposed to be the investment grade side of the bonds. So this is supposed to be that high quality side. And yeah, they've been getting hit pretty hard and they're kind of getting back down to that low December kind of time frame. And the SPY isn't even close to those late December lows. So we'll see. We'll see what happens here over the next couple of weeks. But I will be watching very closely what the bonds do in comparison with what the SPY and really the Qs are also doing. All right, so looking at maxpain.com here, this is just a great website that tracks a lot of very valuable options information. So looking at the SPY here for the expiration of February 17th, which is the expiration of today. And I just kind of want to note how many options basically just expired. A lot. Okay, 323,000 here on the 375 strike for the puts, and that's a lot. This is a significant amount, and it was one of the highest amounts of options open interest out there currently in the system. March has another great amount, but we'll take a look at that here in just a second. But I just want you to know how many options are basically expiring right now, which is almost 5 million contracts. And last week I started tracking basically how many options are out there for each expiration on the Friday expirations, kind of going forward. I'm not tracking the dailies going forward, for like the 2 weeks, but any Friday expirations out for 2 weeks, and then all the ones after that, I'm going to track those. And I just kind of want to look at this data over week and try to get an idea of, are we seeing a lot more bullish buying, or are we seeing a lot more bearish buying of options, right? So I've changed a little bit of this layout. One, I made it darker so that it doesn't kill our eyes. I will continue to try to reformat the background here in the Excel. But what we can see here is the calls and puts are the lines, and the delta, the week over week change of calls and puts, is the bars. Okay, so the lines go to the values on the left side, the bars go to the values on the right side. And what we can see here is March, there is a lot of options out there for the March 17th expiration, okay? And we are continuing to see quite a bit of activity even in that March expiration, even week over week, as there was a lot of people buying calls and puts. Now, week over week, we did still see much more buying of put options, as you can tell by all these bar charts that are out here that are a little bit taller than all the green bars, right? But there were a few instances where we did see some call buying that was a little bit higher pace, but it wasn't significant, like this June 16 expiration. Yeah, there's a little bit more call buying. If you combine that with the June 30s, a little bit more buying of call options out there in June. So just something to note. But the way you want to look at this is you want to see, okay, where are the peaks at? And we got some pretty good peaks here in March, and we got some pretty good peaks here in April and also June. Now, if you look past June, or really even past June 16th, there's not much action. There's not a lot of puts out there, not a lot of people making bets on which way the market's going to go up or down, or hedges or anything like that. So a lot of it's front loaded in the first half of this year. Now, I do understand that as we move farther into the year and we get closer to that second half of the year, that the back half of the year will start to fill up with options, and we'll see kind of which way calls and puts kind of go at that point in time. But I'm not really sure if this information is going to be beneficial week over week. Just something I kind of want to just track here going forward for a period of time and see if we do get anything valuable out of it. There's a few things that I do clearly see here. One is week over week, there was a lot more call buying over the next 3 to 4 weeks than there is after the 4-week period, okay? And what's going to happen on March 17th is very important to understand. That is when we are going to get CPI data for February. So you notice there's a lot of call buying before then and not so much after then. But I do understand that there's a lot of options activity going on in the next 3 to 4 weeks that we don't really see after that. So we'll see what this looks like next week. And I do think we start to turn a little bit more bullish on the market. I know the past 2 weeks have been really more choppy than anything, a little bit more of a pullback, but I'd be interested to see what these bar charts kind of look like as we go into more of a bullish move here possibly over the next couple weeks. All right, so taking a look at the Qs here, I was really hoping to see really the SPY and the Qs. The SPY actually did take out this low from February 10th today. I was really hoping to see the Qs do it. I was really hoping to see the Qs do it, and that probably would have pushed the SPY down, probably sub 404, but we didn't see the Qs, eventually make that rollover. And Monday is going to be a holiday. I'll mention that here at the end of the video as well. But Tuesday, I do think we'll probably see some more bearishness come out in the market. And if we do get that retest below this February 10th low and possibly into that 295 area, kind of these highs that we had back in November and December, I would really like to see that level. If we do get that, I would be looking to be long on it, as I think we'll probably push. I think the Qs will push up pretty far, probably get back up and fill this gap that they made back here from August, and probably be in like the, maybe the 323, 322 type range. That would be a pretty solid look here over the next 3 to 4 weeks if that were to happen. All right, so bringing it all back to the SPY, I would like to see some early weakness, earliness next week, early bearishness, whatever you want to call it. Basically, maybe on Tuesday, get a quick drop and maybe retest in below 403. I would really like to see take out the low that we put in on Friday, and then make the move going into March up to around the 423 area and basically fill this gap that we put in back in August. If we even got to like 421, I'd, fine, whatever, 422, be okay with that too. This is something I would really like to see kind of happen. And if we do get this on Tuesday, even if we get it on Wednesday, I would probably be looking to buy that kind of dip action there. Qs and the SPY would be setting up pretty well. And it just looks like a pretty nice consolidated kind of flag pattern coming in here over the past 2 weeks. So it looks pretty good to continue bullish. And I do think we probably would continue bullish, as the dollar would probably be resting, rates would be resting. Looks like bonds probably look like they bottomed here in the near term. And I could see, the stock market probably pushing higher. And what would be really interesting about it pushing higher into this week, March 14th, would be CPI. Next time we get CPI, and that would be when we get it for February. Now, we've seen a few times where we actually do top out or bottom out on the market on CPI day. We did back here in December, on December 13th. We did back here in October, on October 13th. This huge gap down got bought right up, and that's basically been the bottom so far of this bear market. So are we going to top out that morning of CPI, or are we going to get a little thruster action the day before on Monday, and then CPI comes in really hot and we gap down, as a lot of people start to then expect the Fed to raise rates even more? Just some different possibilities, but I do think we will be bullish up until that point if we do get a nice little pullback here on Tuesday or Wednesday coming up this week. Also, just a reminder, Monday will be a holiday. It's President's Day here in the States. So if you don't have a president, or if you're outside the States, celebrate our president, I guess. I don't know. Or just enjoy your day off. Hopefully you're living on beaches somewhere. But yeah, we will not be trading stocks on Monday. I'm sure the futures markets will be open, but we'll see how some of this plays out. And if we do get this little bullish run here up to the the lower 420s, I would be looking more bearish up in this zone if we got up to the 420s here over the next 3 to 4 weeks. There's a lot of things that kind of line out with us getting up to here, and then CPI probably brings us back down to below 410 by the end of that week. And maybe when we make a move below that by the end of March, it's possible. But I would be looking to be bullish here over the next like 3 to 4 weeks. I know a lot of people hearing the FOMO. We haven't really gone anywhere. That was another thing that was really interesting here over the past 2 weeks, is you hear a lot of people about FOMO, fear of missing out, how bullish the market was over the past 2 weeks. Don't fight the tape, but we didn't go anywhere. We just continued to, anytime we gapped down, the market bought it up, but it's just, we can kind of just pulled back here over the 2 weeks. So it's just really kind of interesting. And I'm not saying we got to go screaming bullish here this next week. Even if we kind of get down here and just kind of hang out for the most of the week and start to push bullish later next Thursday, Friday, I could buy that. And then we go bullish into the end of February, beginning of March. But this is kind of what I'm looking for on the market here going forward for the next few weeks. And that is kind of my game plan, kind of what I'm looking at. We'll see what, any of this needs to get adjusted out in the future. But for now, that's kind of what I'm looking at. And so until we get to CPI and really even then FOMC then the following week, yeah, I don't really want to be bearish on too much, as a lot of things have moved in a direction that the market should have been extremely bearish, but the market hasn't been extremely bearish. So it just tells me there's a lot more bullishness out there. So just continue to be bullish, and then we'll see kind of how things line out here when we get to the middle of March. Alpha hunters, have a great weekend and take care.